Nestle is buying huge volumes. So Nestle is coming to buy over 40 million, $50 million and things. The Bank of Ghana on a weekly basis just gives $20 million on the market. And $20 million, and you are looking at one company, Nestle wants $50 million. Not Nestle alone. There are other multinationals, there are gold people, there are a lot, even banks themselves. Most banks are multinationals. They need to repatriate and everything. So there's a huge demand in the first quarter of the year, right? And also traders will also need money to go and get some goods to restock for the new year, right? Some of them will even request as early as possible because they know in February there's a Chinese holiday, so there's markets there'll be the marketplaces in China are closed. So hence, if anything, they would want to buy the stuff in January as early as possible to make sure the shipping comes as early as possible before the Chinese market close. So you see that in January, we see a lot, there is some sort of depreciation or pressure on the currency. So knowing that as a fund manager and it's January 1st and I have 10 million lying down in my account, what am I going to do? Immediately, I'm going to buy dollars. I'm going to buy dollars and hold that dollars. I can hold that dollars, or I can decide to even invest in dollar-denominated assets. I can buy dollar fixed deposits or dollar repurchase agreements and things just to make sure I get a good entry point. So that's how we fund managers participate in the Forex market, right? There are times we saw like what we saw, the appreciation of the currency, where in October, getting closer to the election, we saw that the CD all of a sudden start gaining strength. So if you've seen the CD start gaining strength, and you as a fund manager, you have some Ghana CDs lying down, do you buy dollars immediately or you wait? So what do you do as a fund manager? You decide to say, okay, I know that this thing is temporal, and it's because it is just the government trying to do this thing. The dollar may lose more its strength, and the CD will begin to appreciate against the dollar. So hence, I may get good entry points. So as a fund manager, I'll use the money and buy fixed deposits or other money market instrument just to time the market a little bit, so I can get some CD return, add up, and I will use the money to buy. I'll use the money to buy more dollars. So I can give you a clear example of what we did, right? We had almost close to almost close to 4 to 10 million. Yeah, I think around 14. We had like around $14 million lying down, and $14 million lying down. And we noticed that the currency was constantly appreciating. So what do? Should we immediately change and go and buy CDs or whatever at that point? No, what we did was, look, we're going to let the money lie down. We will not panic because we are not short-term investors and things. We will not panic. We will not do anything. What we did was we even did a dollar-denominated repurchase agreement so we can get some interest in dollars, so that when the market turns, because we need the money in CDs, when the market turns, we'll then change the money in dollars for our obligations. And you can see what happened, right? So the dollar depreciated, but now the dollar is beginning to appreciate against the CD. So at this point, we have not really lost in way. We are waiting for the for March of April there, about when the budget is ready. So we are looking forward to how the budget is going to be before we take action on whether to change our money or not. So that's what we do on that. And we are not speculating. We are players. Money is actually moving from our account to a bank account and vice versa, right? That is what we are doing. If you come on the retail market and what forex traders do, people think they are actually trading. You are not. You are speculating. Your money is moved to a brokerage account. The broker has given you the platform for you to trade. Your money is not moving from your mobile money account or however you topped up, moving from that account to a bank account in maybe Mauritius, or a bank account in JP Morgan account in New York or something, and it's being moved somewhere else. No, it's the broker is rather giving you a platform. So you are speculating and you earn money off the speculations, and not as if your money is moving. So we fund managers and things are actual movers of the market. OMCs, which is oil marketing company. So you see that Ghana, we import oil, we import these petroleum products and things. We import them. So you see that well, Shell, Total, these people are buying a lot. They are buying they need a lot because they need to buy oil out of Ghana. And so these people are buying close to 50, 70 million every 2 weeks. They are buying 50 to 70 million dollars worth of oil or products. So you see that these people are moving money. You are not. You are speculating. So as a retail investor, what you are supposed to do is ride with the big boys. No, just have a clear direction of where maybe these market movers are looking at, and you ride with them. So as a retailer, where you're saying, look, what do you think Goldman Sachs is doing? What do you think JP Morgan is? Read their market outlook. You read their market outlook. What do you think their research guys are saying? Have a fair idea of all these things. Listen to the news. I say you are able to deduce between the noise and stuff. So if you only know what you're doing if you read a lot. So it's very important as a forex trader, know what's happening on the market, read a lot, and be able to deal what the noise are and what the actual market players are doing, and ride with them, because you are speculating. You are not an active member in $1 trillion Forex market.
That's very true. That's very true. Because there's one thing that we've been bringing the attention to. So, guys, you should know that what you are actually doing, you are trading CFDs, and CFD is a financial derivative. You get it? So, this tool is actually giving you the power to what speculate on assets. You see, and that's exactly what he has um, he has cemented. You see, so you guys should know what you are doing. And I've always been saying the fundamentals. Pay attention to the news. What's happening in the current just on the country's economy, and how is it going to affect the pair, or let me say the assets that you are trading. You get it? So follow what the big boys are doing, Senor. As the big boy himself have told you. You just need to what? Follow that trend. Look, get to see what they're actually putting their money to, and whatever trend they are creating, just make sure that what you are part of it, and pay key attention to risk management. And there's this comment from Senyon, and I think, yeah, the confusion here is about the mark to market and what is the name? The dollar debt, no, the domestic debt exchange. So I don't know. I would like to explain it from our point of view. In case I'm wrong, kindly help me out. All right. So when we say this one, the mark to market, from my little there's an accounting background. So it's a practice where the value of an asset, or let me say a liability, yeah, is updated to reflect its current market price. So yeah, we see this one commonly being done in, let me say, investments, trading, investment portfolios trading, and let me say mostly even when it comes to companies, we do financial statements, and there are times that we need to do this mark to market stuff just to make sure that what's the price, or let me see, yeah, the price of an asset has been updated to its current price. And we also have the domestic debt exchange. So this is basically the restructuring of a country's internal debts, often to manage financial crisis or reduce debt repayment burden. So mostly we have them either changing the interest rates, the maturity dates, or let me say the principal payments, yeah, and the connection between the MTM and the DD, that's the mark to market, and the domestic debt exchange. So when a government implements a domestic debt exchange, we have financial institutions holding there's some government bonds. So let me say when the government should implement a DDE, financial institutions holding the government bonds must mark them to markets, which can lead to significant losses on their balance sheets. You see, so let's take what happened in, was it 2021 or 2022? Yeah, so Ghana faced a very severe debt crisis, making it difficult to meet its debt obligations. To stabilize the economy, and secure an IMF some bailout, the government introduced the DD program. So whenever you hear me say the DD, I'm referring to the domestic debt exchange. You see, yeah. So now, how does that one play? Like, how do I even break it down for you guys to actually get it? So let's say a bank held like 1 billion worth of government bonds before the domestic debt exchange. If the restructuring caused the bond prices to drop by 40%, the bank would have to mark down its bond holdings to, let me say, 600 million, right? Yeah, so recording 400 million loss in its financial statements. You get it? So that's basically what happened with the mark to market and the DD. So I don't know, how well did I do on that? Was it well explained, or I missed some key stuff out of it?
No, you're right. You're right. You just explained it as you best way I can even do it for senior is an iPhone, right? When it was
Mm-hmm.
an iPhone, the first time it was actually introduced, or maybe the iPhone 16, they said it's maybe 20,000 Ghana cedis for one, right?
Yeah,
Let's just say it's everyone knows it's 20,000 Ghana cedis. So that's what we all know the value of the iPhone is
iPhone.
20,000 Ghana cedis. And now iPhone 17 has come. Now, what's the value of this iPhone? When I go to market and I want to go ahead and sell this iPhone, they'll tell me that the iPhone, which I thought was 20,000, was worth 20,000. I'm being told that actually worth 15,000. I had it in my books that, oh, my net worth is 20,000. Now
20,000.
I've gone and I've been told this is the true value of my money, which is what 15,000. So hence I'll
Uh,
need to realize a loss of what 5,000. So that's
5,000.
generally that's what happened to the banks, and well, that's what the whole mark to market meant. They all thought the value of the security is this, but the actual value of the security is lesser than what they had on their books. So to reflect that, everyone had to drop down. So the value of their portfolio went down, both banks, collective investment schemes, and all those things. All this happened at the same time, and hence it affected the market. And because the value of their security is low, no one is buying. So no one is buying your security. What do you have to do? You have to sell it at a loss. You sell it at a loss because you have to pay people, because people were coming in for their money. Since everyone is coming for their money, you have to sell it at a loss and just give them the money like that. So that's what happened.
That's very true. Thank you very much for helping me on that. Yeah, so with that being said, I will be taking the questions individually from you. So it seems Senor has a question. Please, you can unmute yourself and ask.
Yeah, sorry, Osajifo, sorry.
Yeah,
Thanks a lot for this session. In fact,
yeah,
seeing the
welcome,
topic, I
boss.
just couldn't afford to miss it because I mean I'm really looking at investing big time, like trying to diversify. But then unfortunately, what I see these days is just T-bills, T-bills, T-bills. But for the session we had earlier with Mimi, referring us to some stocks and some, I mean, ETFs and whatnot, I also kind of downloaded the IC what and some other apps to really look at how these things will perform. But I realized I have to do a lot of reading in there. So for me, like this, and the best way I understood the debt restructuring was like, I mean, for me, my layman perspective, I just use apples. So let's say I have 5 apples, and the agreement between me and a borrower was that if I give you 5 apples, the next time you are coming back, you will give me 7 apples. But the next time comes around, for whatever reason, the weather changes and whatnot. You said even the 5 apples what I learned how to you can't return it to me. So what you can give me is 3. So with this, so
Okay.
that's how I understood this debt restructuring thing. That it's like more like I say conditions beyond the bank's control that cause this whole thing. But hey, it's all good. It's all good. It's all good. But but then there was this particular case with this guy Michael Blankson. I don't know, this American comedian who invested in euro bonds issued by is it the Bank of Ghana or something like that. And I don't know how the Eurobond also got affected by the debt restructuring. I would like you to enlighten us on that. Mikey,
Okay,
I don't know
that's a
whether
very
you
good
know about
question.
that case, that issue. Yeah.
Oh, yeah, yeah. I'm very, very familiar with that. So here's what happened. I would like to break it from the up there and break it down so that everyone will understand what really, really happened. Right? I'm sure there's a lot of news and some of them noise, as I always say. So, government of Ghana, um, after Ken Ofori-Atta came into market, knew that he had to sustain the currency. And to sustain the currency, meaning we have to have dollars in the market because we have less dollars. Everyone is demanding dollars, like what I mentioned. Everyone, the OMCs, the multinationals, and everything, all demand dollars, right? So we've been going to the market to issue what we call Euro bonds. The Euro bonds is, I'm saying, look, give me your dollars right now. In future, I will give you back your dollars. However, interim, I'll be giving you what we call coupon payments. And this coupon payment will be in dollars. So I said, I've come to the market, give me 1 billion. The 1 billion will be for 10 years. Means in 10 years' time, I have to give you back your 1 billion. However, it's at 10%. So meaning every year, I'll give you 100 million. That's what they've said. Okay. And they were doing it back to back to back to back. Remember, Ghana does not spend dollars. So there is limited dollars we can get. That is the number of the dollars we can get is based on our exports. So from our gold, cocoa, and oil, and what other mineral resources or what we can use to generate dollars. That's what we can have, and that's what we can use to pay back these people. So Ghana went in 2017. You've gone in 2018. You've gone in 2019. COVID has come and you want to go again. At that point, the international investors were like, hold up. You keep on coming every year. Now let's take a step back and see, would you be able to pay us? At that point is where they notice that something is wrong. You've been coming every time, and now you've gotten to a point that if we don't take care and we give it to you again, you'll not be able to pay us. And because you were coming at even a higher rate, you know, everyone sees a desperate person. Oh, first I came with 5 CDs. Now I've gone 10 CDs. Now things are expensive and yet you want to issue. That is when the international investors say, okay, no, look, we are not giving you money again. Now that we've lost access to our our access to the international markets, right? We started getting what we call downgrades. The downgrades from the people started happening. Now, Fitch downgraded us, Moody's downgraded us, S&P downgraded us. Now we are starting downgrades. If downgrades means that your risk assessment has become higher, so anyone who is willing to give you money it should know that, hey, if I give you money, I may not get the money back. So it is your way of assessing which the issuer, right? So we may not know this, but Leshego and all those things, they have way of assessing this, and that's how come when you apply for quick loan, someone will go, you get, someone will go, you will not get, because they have an algorithm back there that has done a risk profile or assessment on every individual based on your purchases and how you use your mobile money and everything. So the same way these rating organizations have done for Ghana. Now we've lost access. Now, Jesus Christ, we have to pay coupons. We have this thing to pay, and now we don't have the dollars to pay. At that point, that is where all the things started happening. We've lost access to it. So then what we have to go and do is beg the people that we beg you, we don't have the money to pay you because we had coupon payments to pay in 2022 and we had almost getting close to a maturity. We don't have the money to pay the people. Every time we've always been living on a Ponzi scheme. Use the money that comes to pay the old people, use the money that comes to pay the old. Now everything is crumbling and we defaulted. Now you've defaulted. What happens? Since you've defaulted, the people say, hey, you are coming to us to request for us to forgive you. What made you default? Because of your spending in your local currency. You said you were going to use the money to do this and this and this. That's not what you were using it to do. You had a lot of ministers. You were spending the money. Look, we all know the politics of what was happening. And we're always coming up with the excuse, oh, COVID, this. But in actual fact, that wasn't the main thing because we had balloon expenditure and on not something that wasn't productive to pay our money back. And that is when they said, before you come to us to talk, show us credible things you want to do. And then that's when we went to the IMF program. The IMF program, we started with the IMF program. Then that shows that we are willing and the IMF would have given us money and in which we can be using that to pay some of the people. And now we say we want to go for restructuring. The people say, look, if you want to go for restructuring, you can't come for restructuring and still be issuing bonds on your domestic market at 20%. Let the restructuring affect everybody and not only us, the international investors who have invested in you. So hence, start with a domestic restructuring. A domestic restructuring is the most painful thing a country has to go through. Countries have gone through restructuring. We have the Ecuador, we have Argentina. Argentina is just a stubborn one. It has always gone through restructuring several times. Argentina has gone through restructuring. Jamaica has gone through restructuring. A lot of countries that I'm reading a whole listing on Lazard or amount of restructuring that has happened in recent years, right? Zambia, I can mention names and names, right? So we say, look, start with domestic restructuring. Jamaica had to, how do you call it? Zambia, they didn't even have to do domestic restructuring. But Ghana had to go through domestic restructuring. That was the condition that they said they would do before they even start talking to us. That is the people that we owe, because we don't owe only the Eurobonds, but we owe the Chinese, the France, the people in France, the US people, those who have been giving commercial loans to us. We owe all those people and we don't have the money to pay. So they said, start with your home country, then you come to us, then we now start discussion. And that's how come the domestic debt exchange came. We started with a domestic debt exchange. We went through the domestic debt exchange, and then the next one, that's when the painful thing, the pensioners had their money logged in, individuals had to, when they were all crying because of what happened to domestic debt exchange. Then we moved to the next phase, which is the Eurobonds. The Eurobond holders, as I mentioned, were people who have been giving you money in 2017, and you had even assured some of them you gave them the money in 2060. Ghana had a lot of Eurobonds. You had about 13 Eurobonds. Almost the money that we had in Eurobonds was almost $13.2 billion. And for a country that in our reserves, we had our net reserve was 3 billion. That was all. Meanwhile, we're owing 13 billion in just Eurobonds. We've not talked about the money that we owe other commercial lenders, like I mentioned, about the banks, like AFDB and all those things. Those are people that we also owe. We've not paid all those people. So now we obviously do not have the money, right? So now that we are coming to restructure the Eurobonds, all the Eurobond holders, well, we had what we call the Eurobond representatives. They were represented by lawyers and everything that were negotiating on behalf of the people, of the holders and government. So those were the conversations that were happening. And the agreement that they had was what they processed, that, look, we are going to issue this Eurobond. We are going to do a restructure on the Eurobond. We are going to have what we call a bond short, a disco bond, and bond. They are going to have two options, the bond par and disco bond. Out of the bond par, if you take the bond par, what that means is, I know you gave me $1 million. The $1 million, I'm going to pay 1% for every year on that $1 million till 2037. 1%. And in your head, that's for if you go for the Eurobond par option. If you go for the Eurobond disco option, what that means is, for $1 million you're going to give me, I'm not going to pay 37% of it. I'm just going to pay interest of 5% on the remainder, which is the $630,000 that is left. So I'm going to return $630,000 to you, but I'll do that in phases. The last phase will be at, I think, 2035 or so. Right. That was the option. So someone like Michael Blackson says, look, I gave you $1 million, and the intention of the $1 million was supposed to get 10%, because if I was investing in US, I'll be getting 2-3%. But I wanted more money. That's why I came to invest in Ghana Euro bonds. And I felt like I was helping Ghana because, yeah, so Ghana Euro bonds were paying 10%, 8% and things. So I was getting higher interest on my investment in Ghana Euro bonds. That was what he did. And the intention was he would do it so I can get money to pay his school project and things that he was doing. But now the government has defaulted and they've restructured, and these are the options that have been given to you. Either you get 5% on your 630,000 and I'll give you back $630,000, or you will invest and I'll give you 1% on your 1 million and you get your money back in 2037. That is what really happened in the Eurobond discussion for Ghana Eurobond. So we started with the Eurobond, we are done with the Eurobond, and now went to what we call the official credit committee. That's what was signed last month by the new finance minister, which is Kasiato Forson, where what we call the official credit committee. These are the people we owe: China, France, and other people who all came together and said they'll give us some sort of restructuring, and that's how come we had the $2.8 billion relief. So what happened was I owed 13.2 billion, but I was able to shed off 2 point something billion of it. So now my owings has now dropped drastically to 11 point something billion. So all I just had to do was beg, but these people have noticed that this is what I have done to them. Henceforth, do you think they will be comfortable to give me money again? If I knew I was going to get 1%, if I was going to get 1% a year, I could have just let my money live in the US, where I would have just been earning way more, or put it in a different asset classes. So that's what generally happened with the Eurobond, and that's what happened to Michael Blankson. So the whole debt restructuring occurred because of the international players saying that, look, because you can't pay us, start with the domestic people before you come to us, then before you come to the China and other people. So they were the last bosses waiting for us. I hope I've been able to answer you.
Well,
Yeah.
Charlie, this expose. Oh, what? Yeah. Oh, you try. And so, I was there, was it ending last year when I think I got a mail from Data Bank telling me to come and fill some ESD form or something like that. I think that was something related to, I think, a table this one, I tried to purchase with them. I mean, okay, well, there were this different, but then with this debt restructuring, how long would the program? I learned it will end somewhere 2027, 2028 there. So our funds are still safe. If we will not go and then shall I say withdraw or go ask for it to be used for something else. I don't know. Is there a period? Is that retracting? Is it for a period like, so when our funds safe to be accessed given this debt tracking program?
I thought I came here to talk about Forex and things, but yeah, I'm talking.
Forgive me. But since you're in the industry there, let me just take this advantage.
Okay. All right. So the debt restructuring process, officially, I told you that the last killers are the ones we did with the official credit committee, which is the China, France, and the other developed countries, right? So when they are the last people, and we just signed off, so we are almost done with the debt restructuring. So everything is in place. So we know that we are under an IMF program to 2026. Our bonds that we have will have to start, and the domestic ones that we have would mature in 2027 and then 2028. Then the Euro bonds, we will have ones that will mature 2035 or so, thereabout. The official credit committee's own hasn't come out yet. So what we know is that from now to 2026, the government has some leeway because they would have been paying more out of their government coffers, but now that mandate that was going to pay would reduce. So there's what we call a fiscal relief. That's the reason why we started getting some upgrades and some confidence, and people have confidence and coming to the markets, right? People are starting to buy treasury bills, are feeling comfortable because they believe the government will be able to pay them. And also they believe that in an IMF program, the IMF is going to ensure that the government doesn't default at this point, because they've set off things that the government should do to ensure that. So you can even have a time frame like, look, I don't know what's going to happen to the government in the next 3 or 4 years, but what I do know is, so far as there's someone who is checking the government from now to 2026, I can invest money from now to 2026 with some sort of certainty that I'll get my money back. But when it comes to 2027, 2028, that is a new conversation to have there, right? And we started seeing some things in the government to see that the government is really, really trying to make sure things are very, very in check. So, for instance, the new government has reduced their T-bill exposure, right? Earlier, we were seeing the government borrowing 8 billion on a weekly basis. When we just saw the last, I've lost 2 auctions in a row. Personally, I've lost 2 auctions in a row where I bid and the government rejects my money. The government said they don't want my money anymore. They are okay with the money that they've got. Last week auction, right? There was almost bid of 8 billion. The government just needed 5 billion, but they ended up taking 7 billion or so. But the government has started rejecting that. Those are signs to show you that the government doesn't want to borrow more. It doesn't want to borrow more. Earlier, every 1 cedi you give, the government will take. But now the government has started rejecting. Those are clear signs that you want as a fund manager. It signals confidence that the government is trying to reduce its cost of borrowings. And that should give you some confidence that, look, if I give the government money, you'll be able to pay me. On top of other things that I know that there's an IMF, you just also came out from a debt restructuring. You don't expect to default just when they've pampered you, you look okay and everything, and you go back again and go and put yourself in the mud. No, it will take some time. So you monitor the government and things. And this is the first time Ghana has actually defaulted. Argentina has done back to back to back. That's Argentina. But the Argentina issue is different from what Ghana is going through. So as a fund manager, you read and know all this before you make your analysis and say, okay, should I put my money here or should I put money here? And remember, is not financial advice. Speak to your financial advisor to tell you where to put your money or not. A disclaimer, please. I would like to say that. So I'm just giving you a concept of what's happening. And now you mentioned about your CSD. A CSD account is what we call Central Security Depository accounts, where it's everybody that buys a security, either shares or T-bills or anything that has to do with a security that has to do with government, right? You have a CSD account. That's an account that is identifiable to you, senior. That says that, hey, Senor, I gave money to government of Ghana. How will they know that you gave money to government of Ghana? They will go through your CSD account, and your CSD account will show that, okay, yes, with your CSD ID, you owe this shares, you owe this number of bonds and things. So everybody needs a CSD account. You need to know this. If you bought treasury bill from a bank or whatever, request for a CSD account. If not, the bank will be buying on their books, and then so the bank will be buying on their books on their name, and that's how come they want to identify individuals or whatever, because the bank bought it in their books, you are not seen as an individual. So hence you'll be affected in terms of restructuring and things. So that's what really happened during the restructuring process, where plenty of people knew that they had bought bonds. But remember, there was a different offer for banks and different offer for individuals. But because they didn't follow up and things, the banks had it on their way and they fell victim of it. So I had bonds, but because I had my CSD account, I didn't participate in the domestic debt exchange, and I still get my coupons and my principal. I've not been affected in any way. But if I didn't have a CSD account, the bank would have just submitted my whole my whole bond portfolio and I would have been affected by DDEP. You get. So Senor, it's something that you need to ensure. So ensure you get your CSD account
Wow,
and
wow,
and be getting your
wow.
statement too as well.
Interesting. Because I remember, sorry once again for digressing, because I know this supposed to be an FSA, but having you here, there, I can get to ask plenty of questions. Yeah, so I don't understand. So why is it that this thing came post debt retraction? Because the mail I got, it came post the whole event has happened. And even I'm not even only bought with Data Bank, but I also have some with ADB as well. But ADB, I've not heard anything from them. So that means I have to go and pursue that come the following week. But the data bank, I mean, I just don't get it. These guys didn't know that they have to do this. Can't we sue them? Because I mean, they should be in the know. We are retailers. We are, I mean, ordinary Joes on the street trying to make ends meet. Why should we be suffering this way?
So I mean, this is all part of the financial literacy, in a way, because not everyone knows what's happening in the industry. Unfortunately, the industry feels like it's very clogged. Like if you don't know, if you're not inside, you don't know what's happening. That's why we always say that look, having a financial advisor is the same as having a doctor or having a pastor or having a marriage counselor. You always need one. If you have a financial advisor, he would assist you so that you would not fall traps into many reasons. And I do that for my friends, even they don't pay me. So I try and speak to people closer to me and things, try to guide them on what to look out for, what the red flags are. If you go to the bank, what do you see? Sometimes I even call and say, can I speak to the banker or can I speak to whoever you're talking to? So that I tell them whatever you want specifically, so that they don't end up mis-selling you a product or making sure or you fall into prey or all those things. Because before you buy a T-bill, you must have a CSD account. That is a requirement. Have that first before you buy a T-bill. Before you buy a share, you must have a CSD account. Before you buy a bond, you must have a CSD account. If that is, you want to buy directly through whoever you are going through, if it's a broker or a bank. But if you want to have a CIS or whatever, I always say before you invest in a CIS, go and check to the SEC website. Is the CIS in good standing? Is the mutual fund in good standing? Is the fund manager in good standing before you invest into it? Also, read and understand what you are buying so that you don't mis-sell. You are trying to do short-term investment and you are buying an Eurobond or a global tech. It doesn't make sense. Those products are for long-term focus. So you must know what the product or whatever you're investing into and the rationale behind it. People even buy treasury bill, a 91-day treasury bill, then they say 28%, and they go and multiply 100 CDs by 28, thinking that they'll get that in next 3 months. Of course, no. These are things that you need to be explained to, like, hey, a 91-day, almost a 91-day is at 28%, divided by 4, multiply it by your number, the amount you are investing. That is what you are going to expect to get at the end or upon maturity. People also just do anything, they just take automatic rollover. They don't even know what that means. So it's financial literacy. It's a job of the person who is selling you the product to explain it to you and make sure you understand the product that you are buying. Yes, you can sue them if you have the financial muscle, but you know this is an institution, so they will surely cover their tracks.
Also, I salute to I beg you, drop your number for the chat box inside there. Make a save this line. I beg drop 'em.
You can actually hit us at for my number.
All right, boss. Thanks. I beg you, the rest over to you. Ask your questions. So naturally, the expert did the house inside.
Yeah, so I've even dropped Emmanuel's LinkedIn in the chat as well. So those who are really active on LinkedIn, you can connect with him over there. Yeah, he's also this one active on LinkedIn as well. Okay. Yeah. And yeah, so on that very question, what's this one Senya was talking about. So Senya, hope you've got your answer and you'll be acting based on that.
Sharp.